Big tech earnings set to drive market dynamics in busy weeks ahead. As Wall Street navigates a whirlwind of news, strategists are emphasizing that corporate profits will be crucial to the ongoing stock market rally. Eric Wallerstein, chief markets strategist at Yardeni Research, told Yahoo Finance that earnings reports will likely be in the driver's seat unless unexpected shifts occur in the economic landscape. In the coming days, several major tech companies are set to report earnings, with a total of 169 S&P 500 companies releasing updates. Investors are also bracing for important data on inflation and the labor market. This earnings season coincides with a pivotal week for markets, as the presidential election and the Federal Reserve's upcoming interest rate decision loom on the horizon. Venu Krishna, head of U.S. equity strategy at Barclays, echoed Wallerstein's sentiments, noting that a lot rides on the performance of big tech earnings. While economic data and the Fed's response will influence investor sentiment on interest rates, the earnings reports will provide a clearer picture of the S&P 500's health. Krishna pointed out that although there has been talk about broadening earnings growth beyond major players like Apple, Alphabet, Microsoft, Amazon, Meta, and Nvidia, analysts have been lowering estimates for the remaining 494 companies in the S&P 500. In contrast, big tech's earnings estimates have not been cut as dramatically, putting additional pressure on these giants to deliver strong growth. According to FactSet, the Magnificent Seven stocks, including Tesla, are projected to grow earnings year-over-year by 18.1% this quarter, while the rest of the S&P 500 companies are expected to see a mere 0.1% growth. Tesla has already exceeded expectations, reporting earnings per share that topped estimates by nearly 21%. Alphabet also delivered a strong performance, surpassing Wall Street's estimates by almost 16%. Upcoming reports from Microsoft and Meta are anticipated on Wednesday, with Apple following on Thursday. Krishna cautioned, however, that simply meeting expectations won't suffice. If they just meet expectations, that's not good, he said. He noted that a surprise in the 5% to 6% range would be reasonable, while anything less could be disappointing. Conversely, results exceeding expectations would be a major win for these tech leaders. Historically, this earnings season has rewarded companies that surpass analysts' estimates for both revenue and earnings. Bank of America's equity and quant strategy team reported that firms beating projections have experienced an average stock price increase of 2.48% the following day, significantly higher than the average 1.48% move for all companies. As we move forward, all eyes will be on big tech and their earnings reports, which could shape the market's trajectory in the weeks ahead.